Yo, this is Thursday, March 10th, around 8 p.m. Been a long day at work, just had a little dinner, and just wanted to address a question that a friend of mine asked me, which is, what do I do right now? The market's down, and just looking for a little advice. I imagine a lot of people are thinking that too. So, without addressing any of the specific reasons why it may be down, markets tend to become bear markets or go down bigger than 10-20% drawdown because of fears. And there are definitely a lot of fears that you can point to out there. I'm sure that one of them that's probably facing all of us right now is high inflation, specifically high energy prices. I know if I go to put gas in the car now, it's over $50. I'm paying my energy bill. It's like 3 times more than ever, and I really haven't even used any more heat than a normal winter. So they're real pressures and they're real fears. But as it pertains to investing, I think an interesting little way to think about it is, my favorite author is Douglas Adams. He wrote The Hitchhiker's Guide to the Galaxy, which you may have heard of. They turned it into a movie. But he wrote a series of books that are awesome and hilarious and really well written. And on the cover of The Hitchhiker's Guide to the Galaxy, which is a fictional book that is basically an encyclopedia for everything in the universe, it says, "Don't panic." And that's the long-winded way of me saying that when the market crashes or draws down, really the key is to not panic. And you can look at any time period in the market, and if you sold when the market crashed, it would be really hard to get back in at the same price or at a better price, because typically, let's say market's down 15%. Okay, I'm going to sell now. Market's going to keep crashing. Well, there are 2 directions that it could go from there. It could go up or it goes down. If it goes up and doesn't go back down, you just sold at the bottom. If it goes down, you're probably still going to be very fearful. And then when it starts to rebound, it's really hard to time the market. So rather than try to time the market, just sit back, don't panic. Think about companies that you would really like to own and see if they have moved to a price that you'd be comfortable paying. And remember that when you're investing, it's a long-term thing. You can buy something now that's going to be worth much more in the future, ideally. And if you can do that at a price that's cheaper than it was 1, 2, 6, 12 months ago, that seems like a great deal. I know professionally we'll keep a list of companies that we'd love to own, but the prices are just too high. And so when the market crashes like it is currently doing a little bit, or a lot, depending on the sector that you're in, when the market goes down, that's usually a good time where we can look back and say, all right, first of all, is the price of this company that we'd like to buy at a reasonable price? And second of all, do we still want to buy the company? And if we do, it's a great time to add. It's very typical. We added a few companies in March 2020. We only bought. I don't know if we sold anything. And I think that's, there were a lot of fears in March 2020, and there are a lot of fears now. Very different fears, but that's what drives a market down. You can't. It's really funny to me if you read the paper, the Journal, or watch CNBC or any of these financial media outlets. They're always trying to explain the reason why the market is doing what it's doing today, and it's like, it's very rare that you can point to something and say this is what's moving markets today. When there's a big headline, yeah, it's moving markets, but you can't say on most days, like, oh, markets are up because blah. It's really funny, actually. If you read the news and inform an opinion and then go into the day, if the market moves against what you think a reasonable response would be just to macro news, you'll notice that is not the reason that markets went the opposite way of what you would expect. But if the market did go that way, you can be pretty sure that that's why, that would be the reason that markets move that way. Anyway, I tend to do this. I just go on tangents. But yeah, if you're freaking out right now about the market, just don't panic. Take a look at the companies you own. Make sure that you want to own them. Make sure that they're at good prices. If they're not, don't worry about whatever the price is. Just move on and get a company that's a good company that's going to be growing over the next several years and going to be giving money back to shareholders, whether that's the form of dividends or buybacks if it's a reasonable stock price. Not buybacks at any price, but we can get onto that another day. If it's a company that's going to grow and you are very confident in that for whatever reason, whether you've done the research or hopefully because you've done the research, then this is a great time to add something to your portfolio. Remember, you're investing for the long term, and hopefully you're not doing things like buying leveraged options and having to worry about what the market's going to do in 5-10 minute intervals. You can think about 5-10 year intervals, and if you can buy at a good price now, a cheap price now relative to where something was a year or 2 years ago, it's good to do that. So don't panic.